Starting a business is exciting, but let's be honest, one of the biggest challenges is money. A lot of people have great business ideas, but they get stuck because they don't know where to find funding. The good news is, there are many ways to fund a startup or LLC today, even if you're just getting started. In this video, I'll walk you through some of the best business funding options, how they work, and which one might be right for you. So, let's get started. 1. Personal savings. The first and most common option is using your own savings. Many successful businesses actually start this way. The biggest advantage is simple: you stay in full control of your business. No debt, no investors, and no monthly payments. But at the same time, you should be careful not to risk all your personal finances. Start small and spend wisely. Sometimes, even a small amount of money is enough to launch your first product or service. 2. Friends and family funding. Another popular option is borrowing money from friends or family members. People close to you may believe in your vision before anyone else does. But here's something important: always keep things professional. Write down the agreement clearly, including how and when the money will be paid back. This helps avoid misunderstandings later. Business and relationships should always be handled carefully together. 3. Business loans. Business loans are one of the most traditional funding methods. Banks and online lenders offer loans specifically for startups and small businesses. You receive money up front and repay it over time with interest. This option works best if you already have a business plan, good financial records, or some early income. Before taking any loan, make sure you understand the repayment terms clearly. Never borrow more than your business can realistically handle. 4. Credit cards for business. Some entrepreneurs use business credit cards to cover startup expenses. This can help with buying equipment, marketing, or managing short-term costs. But this option should be used carefully because interest rates can become expensive if payments are delayed. If you use credit cards smartly and pay balances on time, they can actually help build your business credit score. 5. Investors and angel investors. If your business idea has strong growth potential, you may attract investors. Angel investors are people who invest money into startups in exchange for a share of the business. Unlike loans, you usually don't repay the money monthly. However, investors may want some control or decision-making power in the company. This option is common for tech startups, online businesses, and companies planning to grow quickly. 6. Crowdfunding. Crowdfunding has become very popular in recent years. This is where people online contribute money to support your business idea. Usually, you create a campaign explaining your product or business, and people who like the idea can support it financially. This method works especially well for creative products, gadgets, or unique business ideas. The best part is that crowdfunding can also help you test whether people are actually interested in your product before launching fully. 7. Grants for small businesses. Business grants are one of the best funding options because they usually don't need to be repaid. Some governments, organizations, and private companies offer grants to support startups and small businesses. The challenge is that grants can be competitive, and applications may take time. Still, it's worth researching because free funding can make a huge difference for a new business. 8. Revenue-based funding. This is a newer funding option that's becoming more popular. With revenue-based funding, you receive capital and repay it based on your business income. So instead of fixed monthly payments, the amount changes depending on how much your business earns. This can be helpful for businesses with fluctuating sales. There is no single, perfect funding option for every startup or LLC. The best choice depends on your business type, goals, budget, and risk level. Some people start with personal savings and later move to investors or loans as the business grows. The important thing is to choose funding that supports your growth without creating unnecessary pressure. Start, manage your money carefully, and focus on building a business that can grow step by step. If you found this video helpful, don't forget to like, subscribe, and share it with other entrepreneurs.